AMD, Advanced Micro Devices, Applied Materials and Electronic Arts are some of the many companies that currently are sitting on their technical support levels. And Nasdaq has found the pivot bottom, laying in the lower end of a very nice rising trend. Is this the week Nasdaq will get back on track? Nasdaq did not manage the Santa rally, and this marks the second year where this has not happened. You're listening to the StockInvest.us podcast, Trading Tips with Jim, and if you haven't done so, make sure to subscribe and like as we start off 2025. I left you 2 weeks before Christmas in a very good mood. I was heading for Norway, had a very beautiful vacation, but the stock market did not follow my mood at all, and personally, the end of the year was not the best at all. Even crypto struggled, but very nice to see crypto again is crawling upwards. And here are what happened to me in 2024. As you know, I like to trade based on longer trends. I try to figure out what I think will happen during the year, and I place my bets accordingly. I adjust my portfolios and everything in between for what I think will happen. And I was very bullish on gold, as you know, and I was very bullish on crypto. I was reserved in general on stocks. Turned out to be wrong because the stock markets had a good year last year, but mainly driven by the bigger companies. Gold did excellent, made very nice profit on my gold. Crypto turned out to be a real success. For stocks, I didn't do as good as I usually do. I was too reserved. But one thing that I did very correctly in my stock trading was getting into more dividend stocks. Turned out to be a very good choice. By the way, I'm mostly into cargo, and most of them are Norwegian. Have a few also in the US markets, but aiming for gas transport across the Atlantic turned out to be a very, very good choice. And with gas deliveries to Europe being halted through the Gazprom line, may even be that we will have a very, very good start. Dividend saved a lot of my stock trading last year, actually. I went into several companies. I reduced a little bit in the war stocks as we saw signs of possible Trump victory. I reduced my portion into war stocks. I should maybe have stayed a little longer, and it may, as I said, it's a place to be if you want future dividends, because world is currently and still escalating tensions. We just have to wait and see what will happen when we get a new president in the United States, if we will be on the path of peace or if escalation still will just continue. But in this vacuum, war stocks, and they will be for many, many years ahead, probably will be very strong dividend payers. So I ended the year up quite much. In total, it was a good year. I should not complain, but it's not the best year I had. Will 2025 be a good year? I do not know. I left the year about 30% invested into the stock markets. The rest I keep in other assets, etc. Simply because I'm not sure where the markets head. During the Christmas time, I have been thinking, so what will be the next? Where will I put the long lines? As you know, I have invested more and more into EVs, simply because I think it is the place to be. And in the $1,000 challenge, I was sitting in NEO before I left you last time. By the end of the podcast, you will hear if I still is in NEO. But I'm a strong believer in EV. I think it will come back. It will take some time, but I think the price levels are very good. And I believe it was some 4 or 5 weeks before Christmas, I told you that the same thing, that I believe EV will do good, and the choice was between NEO and Tesla, and I said I believe both will do very good, but Tesla really impressed. And by the way, in a few minutes I will give you my Tesla analysis. I have to change the concept of the podcast, try to make it a little bit more interesting for you. And one of the things that I will focus on 1 or 2 stocks during each podcast, highlight a little bit more what I think will happen. And I will start with Tesla. There will be a president change. Until that happens, we still have a few weeks left. Anything can happen. I say anything can happen, and I really mean that. It's very uncontrollable situation, and somewhat reflected in the gold prices, which have been held up very steadily, currently sitting $2,639 for gold. And more and more analysts, after saying that gold should fall, currently say that gold should go up, and JP Morgan, etc., Goldman Sachs, they have targets above 3,000. As you know, my target is 3,500 for gold. First it was 2,500, then I raised it to 3,500 after reaching 2,500 in gold. I think gold still will be geopolitical. There is a lot of geopolitical issues coming, so I still believe in gold. The other thing that I think will happen this year, and I have spoken about this before, I do not think inflation will go away. I think that inflation again will rage. I was maybe one of the very first to say in podcast series, remember this is the 6th year of my podcast series, I told you inflation would come, increasing interest rates, and it happened. And now I'm warning you, I think there is a fair chance that inflation again will push up. They think that everything should calm down, but you have to remember that all the price hikes last year, all of this has to be offset somewhere. It has to be offset on the end consumer. Most companies, and we saw this in the quarter results, I warned you about this, pay attention to the profit margins. Profit margins has been going down, and they will have to be raised, which just means that they will have to raise the price on the end products. And I see it every day where I currently are, Lithuania, that prices are increasing and increasing fast, and everyone is speaking about increasing their prices. The hairdresser is saying the same thing, have to increase the prices by 10%. It will come now, start this year, with a 10% increase for the hairdresser, for instance, simply because her costs have gone up so much. Electricity, everything is up, and you can only take from your profit margins to a certain level. Then you just simply have to raise. And I think this is the period where we'll see that thing happen. The prices will keep growing, and they will grow much faster than expected. Why? Why is this important? Because the stock market is highly correlated to interest rates. If interest rates goes down, markets usually go up. That's the current correlation. Could be some offset period, but it's like the most common thing. Everyone expects Fed to cut interest rates to start boost back economy, but they cannot do it if inflation is raging too much, because it will just add fuel to the interest rates. So I think, personally, and that's how I will invest and do my investments, I think that inflation will remain very sticky and even surprise many, going off the rails, meaning that we can get back to the super inflation. We will see. It's tricky to guess it totally correct, but my bet is inflation will go up, and only 11% of the analysts thinks that Fed will reduce the rates in the next Fed meeting, by the way. So we'll see. First off, they said that no interest rates will be cut 5 times last year. Didn't happen. It was two times or something like this. And now they just keep reducing. I think everyone is starting to see somewhat the same. With that being said, so I believe interest rates will remain sticky. And I think that will make harder on the economy, meaning that I will keep investing into dividend stocks, simply because in a market where you cannot be fueled by lowering interest rates, I think it might be hard to keep making money on stock prices growing, because it will just simply be harder. And in that case, you still can do good on certain dividend pays. You have to remember that take Coca-Cola, for instance. People do not stop drinking Coca-Cola. It's one of the last things they do. They will start to cut other things before cutting their drinking of Coca-Cola. So it's a high chance that Cola will keep paying okay dividends. And as I just mentioned earlier, the same thing for war-related industry. They will keep producing because targets has to be reached for NATO, target has to be reached for different countries. All of them have increased their defense budgets. So they will also keep paying good dividends. So part of my strategy for 2025 will be to make sure that I have a huge portion into dividend stocks. I will not increase my total exposure in the stock market. I still do not think it is an obvious buying situation. And the same thing goes for AI, etc. I'm not sure this is the place to be. I believe governments will have to, so about AI, there will be certain stocks doing very well, and these companies, they will remain very high, but I'm not sure there is like the upturn we saw last year, etc. I think government will start to push out supports to try build up the economy. Look at what is happening in Germany, for instance. Now it will be even worse, not having having less gas, etc., cheaper gas, having to buy a very expensive gas from US and Norway, which benefited very, very greatly, by the way, from what happened a few years ago when the gas line was blown up underseas. Now, we will see what will happen, but I believe countries will have to start try to stimulate their economy, and they will doing so. They will do what they did in 2020 also. They will put a lot into green tech. So I have a feeling that green tech is a place to be. Expected to be slow, but I think it might be a good choice to have a part of the portfolio. I for sure will do it, be in some selected green techs, EVs, etc., because it is the future if we just manage to get into a more peaceful world. The other thing which I think will happen is that when Russia was sanctioned and all these things happen, I told you that now you will see the world get divided. BRICS will grow extremely fast, and BRICS are growing extremely fast. I don't think this will turn. It will take years and years. Even Trump threatened that anyone going away from dollar will be punished by tariffs, but I think it's too late. I think the division is too big. And in the situation where East and West still is very divided, and we have lack of trust of fiat money, I believe crypto has a fair chance. I will stay also in crypto. These are just some of my thoughts for the longer markets, and they will decide, they will reduce my selection. Actually, so I will do like this. So these are my overall thoughts. And when I'm looking for stocks to invest into, I will look at stocks that fit my thinking. Let's take war-related stocks. So I will look for stocks that pay high dividend or have very, very good chance of paying dividend or increasing dividend. By the way, at stockinvest.us we have tools for this. You can see, you can go to each stock and you go to the dividend tab, and you will see the chances of increase of dividends, etc. We have made a few scores for you there. So I will do this. I will look at each chart, look if there is support below. I will look at volume, etc. All of these things which I like to look at technically. And based on this, I will decide which stock I will enter, or which single stock or multiple stocks that I will enter. But this is how I select the longer term. But you probably are waiting, what about the week ahead of us? And ahead of us, there will be a few quarter results coming out. They will mainly be on Friday, if I remember correctly. It will be Constellation Brands, there will be Delta and Tilray. These are the main and bigger companies that will come with their quarter results. But we are slowly again starting after just leaving. I feel that we just left last quarter season. We are slowly getting into next quarter season, and I again urge you, Not to look so much about the number because that is the past. Look at what the CEOs are saying about the future, and especially profit margins and how they will try to change strategy. That's what I will be looking for. Rest of the week will mainly be about the job numbers, and it will be Friday where we will see the December job numbers. It's expected that unemployment rate will stay at 4.2%. And if job numbers go up, jobless numbers go up, that's an incentive for Feds to cut interest rates. That is why it's so much focus on it. It'll start on already tomorrow on Tuesday with job openings. Thursday we will have jobless claims for last week, and as I said on Friday we will have job numbers. This are what the short-term traders will look at. But again, as I said, unemployment rate can go up. And Fed can be in a situation where we also have inflation going up, and the one will kill the other argument for cutting interest rates. Again, it will be very interesting to see what will happen. My bet is that Fed will not cut as you think, and that inflation will be harder. And we have talked about something called stagflation before. We'll not mention it. These are the main events of the week. Nothing really special. Oil, doing good, $74 for the oil, mainly fueled by actions in Syria and a few other things, but up more than 4% for oil, holding okay. Gold, as I said, $2,639. Everyone expects gold to keep pushing upwards. Another very, very important item to look at is the 10-year Treasury yield. Again, also, I feel like I'm repeating myself, but over all these years, I told you, look at 10-year Treasury yield, because if it goes up, market goes down. Last time I spoke to you before Christmas, it was 4.4%. Now it's 4.6% for the 10-year Treasury, meaning that the professional investors think there is a high chance that interest rates will not go down. You can keep an eye on it. It gives a clear indication. But what about the week ahead of us? So we have these jobless numbers. We have Fed minutes on Wednesday, where Fed will just talk more about the last decision. You will have a little bit more insight. Technically, Nasdaq, I started the podcast saying Nasdaq is in the lower part of a trend, having a buy signals from pivot in the RSI chart, giving a buy signals from the short-term moving average, will, if it goes up today, also give from the long-term, will give a buy signal also from the short-term moving average if it continues upwards today. Everything technically indicates a high chance that Nasdaq should push upwards. The only thing that contradicts this is something called divergence in volume, meaning that usually you want the volume to follow the price. Volume should go up, price go up. Volume should go down, price go down. That's how it is. If there is a divergence, is usually an indication that, or at least it's uncertainty about the signals. And the volume is not following the price for the markets. This is the one thing that reduces the chance a little bit. So technically, it's looking good, but volume is not confirming what we see, and that can lead actually to further downturn. If it happens, Nasdaq has support on the current levels. It starts to become more critical if Nasdaq hits 19,000 and falling below. And Nasdaq has actually been falling since my previous podcast, which I mentioned before. But for last week, both Nasdaq and Dow Jones are up, by the way, for a few trading days that was last week. This is how it looks like. Very, very shortly getting to the Tesla analysis. First, rewind back to the last podcast. I gave you stocks which gave buy signals short-term, medium and long-term. And just for fun, let's see how that went. I said short-term. Cirrus Logic, First Solar are giving buy signals. And they went up a few days. This was for very, very short-term trading. They went up the first few days and then fell. For medium term, I said that Micron, Teradun and Baidu gave buy signals. And Micron, for instance, currently is down 15% since that, so they did not manage to hold the buy signal. For longer term, I said that iRobot, ATS, and 3D Systems, DDD, have all given long-term signals, and now we are talking long-term. We are talking much more than a month, 3-4 months at least moving forward. iRobot is actually up 10% since I said it. ATS is more or less around 0, while 3D Systems did not manage to perform at all and is currently down 15%. There you go. I also said something about stocks close to support, and Applied Materials was one of the stocks that was close to support last time we spoke, and this is for short-term trading again, and it went up. Chimera Therapeutics managed to go a little up as well, while MongoDB did not manage and fell. I gave you some of the stocks in the very intro of the podcast. I said AMD, AMT, and EA, Electronic Arts, are all sitting on support levels. We'll see. Will they bounce up today? To me, the chart tells a fair chance that they will do so. Anyway, here are some stocks which are in very good, strong trends, and trends are usually your friend. So these have like solid drive upwards. Some you might know, Netflix is in a very nice rising trend. Tesla is in a nice rising trend. Coinbase is in a nice rising trend. Duolingo, which many probably use to try to learn a new language, is also in a nice uptrend. This is for medium term. So these are some of the stocks that looks good, and that is why you should use lists in your favor to find stocks that fit different criteria. Going into one of these stocks which I just mentioned it's a higher chance of continuous upturn than a lot of other companies. Now I see time is moving very fast. Usually I talk a little bit too much. Let's look at Tesla and what the chart says about Tesla. First off, if you look at Tesla, it's almost like a copy of Nasdaq. That's the first thing that I see. Found a pivot bottom in the RSI chart at 41 in the RSI. Buy signals from the long-term moving average. If it continues up today, it will give buy signals from the short-term moving average. Volume is following Tesla, and I really like this. It is in the bottom of a rising trend, has strong resistance above current level. There is quite much resistance up to 440, currently sitting at 410. So for the next 10%, there is quite much resistance. So there is not a strong chance that Tesla will move very fast. Of course, if trading day to start with Nasdaq being up 2-3%, that should pull easily Tesla up, which was up 8% on last trading day, by the way. So yes, it can happen, but I think the last upturn it's just reacting up. Now it faces a lot of resistance, can still be a nice upturn, but these first 10% should be a little tricky, but not very tricky, because everything is indicating that you should be able to break it. And when it breaks 440, you can expect much faster movements. So if you're a Tesla investor or thinking about Tesla, everything, in my opinion, is looking good. Has a score of 401 at Stock Invest from the technical algorithms that I created many years ago. I totally agree to this. I'm just saying that now it can jiggle-biggle a little bit, but breaking 440, you can just expect it to push much faster, and I will not be surprised if we see a very good end of the week for Tesla. If it doesn't manage, if resistance is too hard, then like everything else, because Tesla is moving quite much, it's has a very high ATR, almost 6% intraday, so it can move like 12% easily during a day. Has no real good support before $350, which means that now there is 15% downside easy if resistance or markets get too hard. That's the name of the game, but long term Tesla, as I said, is looking very good. Let's run through a few buy signals before getting to the $1,000 challenge. Again, if you haven't subscribed, if you haven't liked, make sure to do it now. Across all signals that we analyze, by the way, I almost forgot. I speak a lot about buy signals. I said there is buy signals from pivot bottom in the RSI chart, etc. For Nasdaq and for Tesla. From my newly developed markets signal, I've been spending some time on creating a lot of new products last year. And one of the things I've been working on is a better market signal. That market signal has flushed 2 buy signals for Nasdaq, by the way. Last time it happened, it was super correct on the bottom and the top, especially the top was very, very perfect. Now it's again flushing buy signals. Very interesting to see if this will be the case. As a developer of products within trading, of course, it's very, very interesting for me to see. But as I said, 2 buy signals, for instance, from Nasdaq has been issued recently, and last time this thing happened, the market had a nice upturn. Across all stocks that we analyze, 24% is giving buy signals. For Nasdaq, only 15% is giving buy signals. When the number gets low enough, I always say that this is a buy signal in by itself, simply because that's where it turns. Usually there is a sort of a balance between buy and sell signals, and if one of them gets too high or too low, it issues a buy or a sell signal. And Nasdaq sitting at 15 is very close to where it should be, a very good buying position. Even New York Stock Exchange is low at 20. It's been flying high at 40, but we saw what happened week 48, 49. New York Stock Exchange was up way above 40, and ever since it started to fall. That happens when things gets too high. When the buy signals gets too high, we flip the signals. London at 18, Frankfurt at 24. Both of them have been lowering since last time I spoke. Tokyo is doing somewhat good, and I read, I think it was Toyota is doing good. While some of the Japanese car brands are struggling, Toyota is doing better than ever. Shenzhen, China, only 7 after flying sky high up in the 60s. Had a little break in during Christmas, but to me this is just a buy signals for the Chinese market. Maybe you remember, if you follow my podcast, I went shortly in to the Chinese market when it was flashing these buy signals which I'm talking about. It was way too low. It was at 767. I said, this is buy. I bought, and I was so lucky to do a very, very nice short-term profits on Chinese related stocks. National Stock Exchange of India 31. 28 minutes into the podcast, we are ready for the $1,000 challenge. It's been a long listening. We are getting to the end, my friend, and feels a bit strange. 6 years I've been trying to give you my best advices on tips and trading, and every year I try to figure out if I can do something new or if I should discontinue the podcast, simply just stop it. I will continue as long as I have some motivation to do so, trying to help you reduce your losses, increase your gains. That is how you will build your fortune. And I can only urge you, before telling you what I'm doing in the $1,000 challenge, don't be greedy. It will only hurt you. Go safe, go steady. That is where the big money are. Getting 5% per week is insane good. Maybe you should lower expectations. Even getting only 1% per week is very, very good. But we all dream about the big scores, and we see it across. Everyone says, oh, I made this and this. I quadrupled my stocks. Yes, now and then you are able to hit the one runner. I've done it many times during my career, hitting runners that have gone super fast, super long, and generated extremely nice cash. But I also know that I've been in positions which have been way too risky, losing a lot of money. It happened last year. It will happen also this year because it's a part of my trading strategy. I'm not always being able to do what I'm saying myself or advising you to do. Sometimes I get into too high risk stocks. $1,000 challenge is a place where I go for high risk stocks. I told you this before, because we have to do that in order to grow $1,000 as fast as possible. Last year I started, I don't remember if it was when it was, if it was just after summer holiday, half a year or something, September, where I started the $1,000 challenge. Time goes so fast, hard to keep pace. But I was able to grow $1,000 all the way up to 4,000. I think I hit 4,000 on the highest, but then I did a few mistakes. Getting into NEO was one of these mistakes. And that brought the $1,000 currently sitting at $2,648. But I doubled the money which I'm playing with. But am I happy? No, absolutely not, because I had much higher targets for the $1,000 challenge. We start the new year with $2,648 in NEO, because I currently still sit in NEO. NEO ending the week at 463. Bought it at 5.10, maybe you remember that. I bought it at 5.10, $5.10. Currently sitting 463 means that that investment is down 9.22%. But I'm a strong believer, and checking stocks this week, I still believe there is a huge upside. I've just made up my mind because my gut tells me that there is a high chance markets will do okay. And I believe NEO, for instance, to be undervalued with potential upside. Also shows it technically being stuck around 4, showing several bottoms 4 plus, increasing the chance of not done. I stay in NEO this week. If I sell it, I will post it on YouTube, and you will always know which stock I will buy before I buy it, because I will tell you in the podcast series before I buy, so you know exactly what I do. I hope you enjoy the first podcast of 2025. I hope that you had a very, very nice Christmas, that you were able to spend time with your family, your friends, doing things that you really like. 2025 is a new year, 24 is gone. We are lifting our eyes, watching up ahead, trying to make good decisions, and maybe 2025 will be the year you make more money than ever. I really hope so. I hope that your portfolio will be much greener next week, and I hope you will be back next week. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.